Good evening once again, my listening friends, my DeFi aficionados, crypto people, blockchain guys and gals. Here we are once again with the DeFi Collective. I'm Robert Vaughn. This is Alex Jewell. And our email is show@thedeficollective.com. So you can reach us through that, SHOW at thedeficollective.com. We have a very interesting show today. As you know, we present things based on the requests that we get from people. A lot of things have been happening in the last week or two. Goldman Sachs backing the first loan with Bitcoin. You have Yuga Labs, and we'll talk about that a little bit. The creator of Bored Apes Yacht Club. If you don't know what that is, stick around. It's very interesting. We're going to talk about the adoption and holding of Bitcoin at the high despite price volatility, due to declining traditional markets and what that could mean and what the implications might be if you're a crypto investor. NFT, profile pictures are sort of the hot thing right now. They are making a lot of money. It's kind of like professional wrestling. They say, the metaverse and profile pictures and digital art is, it's not really real. Neither is professional wrestling until you look in their bank accounts, and then it gets very real. So this is something else that has value. When people perceive something that has value, it has value. If they're willing to trade on it, it has value. Some people don't think Tesla stock is worth what they ask for it, but he's the richest guy in the world. So there are another group of people that feels that it has value. So we'll talk about that. And also, if time permits, we're also going to cover Coinbase too. Coinbase is taking some interesting, made some interesting moves lately. Actually the loan that Goldman Sachs backed was for Coinbase. So we're going to get in that a little bit. So without further hesitation, Alex, take it away. Goldman Sachs, what should we know?
Well, there's two big pieces of news this week for Goldman Sachs. One of them more vague than the other. The first one that you mentioned, of course, is the first Bitcoin backed loan, essentially taking Coinbase's Bitcoin as collateral for a loan. Pretty substantial move. It hasn't been done, certainly not at this scale with this level of a player. It's a huge signal because it doesn't just show that Goldman Sachs did it one time as like some sort of like special occasion for Coinbase. Goldman Sachs is probably getting tons of requests like this because you see the digital asset industry expanding like crazy. You have tons of companies sitting on pretty large books full of a variety of digital assets. And they have to be able to use those digital assets. If that's what they play in, they have to be able to use those digital assets as collateral if they want to grow. And so the opportunity for Goldman Sachs, now they have the first mover advantage in terms of doing that. They're probably testing the waters a bit in terms of, is this, how's the SEC going to respond to this? The SEC is quickly hiring, of course. They even announced it this week that they're expanding their crypto fraud department. So a lot of activity there. And that's the first thing with Goldman Sachs is this loan. The second thing is that Goldman Sachs announced, probably not a coincidence, alongside their loan for Coinbase, they announced that there's a huge potential for NFTs in terms of financial instruments. This has been known. A lot of banks have behind the scenes been exploring this possibility because all NFTs are essentially this non-fungible tokenization of anything. And so if you can settle anything unique in extremely complex transactions that normally in traditional finance would be extremely cumbersome. You're dealing with like tons of trade desks having to communicate with each other. You're dealing with really cumbersome infrastructure and markets, finicky markets. When you can, have things immediately liquid and immediately transferable and immediately settlable on chain, the ability to represent a variety of those things in the form of NFTs and have participation in novel ways with NFTs that's pretty significant. And so Goldman Sachs knows that. Now, when they announce it is, of course, interesting because it's not too long after Coinbase announced the release of Coinbase NFTs.
You're a mind reader, Alex. You're a mind reader.
So pretty interesting timing there, I think. Not because, of course, Coinbase NFTs as a marketplace is not handling financial instrument NFTs yet. But if Coinbase is setting up the architecture to support, more the mainstream market NFTs, the profile pictures, proof of purchase type things that the retail market is buying, like these Bored Apes, if they're setting up architecture to support those NFTs, technically they're setting up architecture to support the protocols of non-fungible tokens. And if they're setting all of that up, that's a big institutional play.
Right. And this is the first time that a Wall Street company has really took a deep dive to sort of merge the financial, the DeFi with the, with the non-DeFi, so to speak, and Coinbase, there's a loan to value ratio they gave Coinbase of about 60%. So that's pretty significant, because real estate, they typically will loan you 80% on commercial real estate, maybe a little more. So 60% of loan to value means that they think that Bitcoin is going to be at the very least worth 60% of what it was when they made the loan.
Right.
So that they have a pretty they have a pretty big research department. I'm sure they've done their homework. So they feel pretty confident that this is going to be something that happens more in the future. Yeah. Now, Coinbase holds about 200 million, actually, that they hold in cryptocurrency, and they hold about 7.8 billion in fungible tokens such as dollars or maybe gold. So the fact that they're going big, with that amount of money, that's not 200 million is not a billion, but it's not chump change.
Right.
And a publicly traded company does not dilly-dally around with a couple $100 million, because if it goes south, a lot of people probably lose their jobs, and a lot of people are going to lose some money. So I'm sure that this is probably a foreshadowing of things to come, if you will, with right. Coinbase and with Goldman Sachs. And I think the reason they did it is they kind of wanted to get out ahead of this thing, because there's going to be a learning curve, because as I said before, this is the first time that, a big company on Wall Street has took a deep dive with, backing, a loan with cryptocurrency. There's still people, Warren Buffett just thinks it's not worth he said if it was $2, he wouldn't buy it. So he doesn't think a whole lot of cryptocurrency, but some other people do, Yeah. And, old habits die hard, and the old centralized finance system, that kind of developed along with capitalism, it's kind of changing. I don't want to say it's coming to an end, but they all come to an end eventually. So it is coming to an end, but it's changing, right. And it's probably going to be replaced, with decentralized finance. And I think this is one more, I don't want to say red flag, but one more green flag. Yeah. If you're a DeFi person, that this is cryptocurrency is legit,
Yeah. And, Warren Buffett was just now getting into tech stocks. Like, I mean, it's not like Warren Buffett has been, on the cutting edge of what he invests in, right? The way that he has historically invested has been pretty smart, but it's been, hasn't been ahead of anybody else, right? And he even has this famous quote about how he doesn't put money into things he doesn't understand. And the reality is, if he's just now understanding Web 2, it's probably going to be a while before, if he makes it, it's going to be a while before he really
Web 3, yeah.
grapples with what this means in terms of digital protocols that allow financial instruments to run in novel ways and new ways that work for a digital economy. If he doesn't, if he's not there yet, he's not there yet. And of course, people are going to hang on every word that he says when he has an opinion. You think about, I probably had opinions 5 years ago. I wouldn't want the public to hang on, and that's just the reality of. So I don't hold it against him, but I also,
And see a lot, you know, I heard somebody say once that, you know, once you get $1 billion, a second billion, you get it a whole lot quicker than you get the first, and so on and so forth. So when he's got, you know, I don't know if his portfolio is probably north of 70 or 80 billion dollars. You know, with that amount of money, you can be a conservative investor because, you know, if he gets 2%, you know, of 80 billion, what's that? Well, 10% of 80 billion is 8 billion. So 2% would be a couple billion, maybe a little over 2 billion, or a little less than 2 billion. So, you know, the more money you have, the less aggressive you can afford to be, and you can still make $1 billion a month, you know, just, you know, making 2, 3, 4, and 5% on your money.
Right.
Which I'm sure he probably does much more than that. So I can, in a way, you know, he's older, and I think when you're older, you're the way you invest, your philosophy changes. You know, when you're younger, you know, you're a gunslinger. You know, you're you know, you're 25 and you got a few million bucks. You know, you tend to say, well, you know, let it ride. You know, I'm gonna bet half of the house. You know, because you feel like you can always get it back.
Yeah.
But I think when you're older, your strategy changes. And I think Warren Buffett indicated he wanted to give 90% of his money to Bill Gates, to the Gates Foundation.
Yeah.
He said because they know how to give it away better than I do, better philanthropist than I am.
Yeah.
So that may be, you know, why he doesn't want to maybe take chances with the money that he's already promised somebody. So you know, I can't believe that a guy that smart hasn't really looked into this. I'm sure he's had people look into it. He's just not convinced, I guess. And
Berkshire Hathaway is a large organization, right?
Right.
You don't know. Who knows? There's probably departments doing all sorts of things.
Right. And he could say he's not interested in it, and they could probably be cutting deals right and left.
Doesn't speak for everybody at Berkshire Hathaway, right?
Yeah. With or without his knowledge, you know.
Right.
So that's interesting. But I think a couple of things stick out is that Coinbase seems to be on the precipice of this merging of, you know, decentralized finance and centralized finance. So they seem to be kind of stepping out front there. Are there any other companies that you know, major publicly traded companies that kind of stick out when it comes to this?
In terms of the financial instrument side, like in terms of you know, publicly traded companies that want to put Bitcoin on, you know, on the balance sheet, you know, really what you have are a lot of crypto exchanges that are vying for that. They're like hoping to go public, but you know, you've got Riot, you have some game companies that are interesting, right? You've got like Riot Games, you know, Riot Blockchain. So you've got like things like that. I think those are probably the closest, honestly. And it's because a lot of the banks are moving towards it, but it's not, you know, it's not fully fleshed out yet. They're looking for custodians. They're looking for the infrastructure. They're looking for chains to settle on. But there is a huge interest in terms of specific Ethereum, especially for Ethereum. There's specific ERC token types to represent securities. And I think this is where there's still some work that needs to be done in terms of like, how do you properly represent securities instead of just, so NFTs have essentially two different Ethereum protocols. One is 721 and one is 1155. These are, they're protocols. Kind of when you think of like computers and protocols, you think of there's like different version numbers, right? Or like different numbers that represent the protocol. Well, you've probably noticed it, but you don't read it for Wi-Fi, for example. Like your Wi-Fi has different numbers depending on the signal. This is really similar in terms of like these numbers represent documents that give a blueprint of like what a protocol looks like, and then you have base code that every token built on that protocol follows, and these are smart contracts. And so most fungible tokens on Ethereum are ERC20s. Most non-fungible on Ethereum are 721s. Some are 1155. And then you have security token protocols that are in development. And those are like where there's still a lot of work, because a lot of traditional securities need a lot of offline work on them. And so that's where, how do you connect these things? You have 1400 and 3643. Those are some of the popular ones. But how do you connect these things to a broader ecosystem? That's a lot of work. That's years of work, right? And so they've been working on this for a few years, but it feels like chaos until it kind of all comes together. And so Coinbase doing this with Bitcoin to get a loan in US dollars is pretty novel. But I think where we'll really see a lot of growth, probably in a year or two when we have a lot more bridges and things between chains, cross-chain communication, I think you'll see the securities themselves tokenized according to these new security protocols. And I think that's where we're going to see that happen even more. So,
all right. Okay. I'm going to switch gears a little bit. Yuga Labs. Interesting story. Yuga Labs created these PFPs, or profile picture tokens, called the Bored Apes Yacht Club. And they're pictures of monkeys, cartoon pictures of monkeys in different attire and different different looks on their face.
yeah.
And apparently they're worth a lot of money.
Yeah.
They had a sale to raise money. They raised $320 million. They also, they raised $320 million after a metaverse land sale. The metaverse is, we talked about that before, is Web3. It's a virtual reality, but there are a lot of things happening in that space. The virtual reality space. Web 1 was the internet from 1990 to 2000, basically an information provider. Web 2 was 2000 to present, where users and consumers create and share things. And Web 3 and Web 2, I think the thing, as we look at Web 2, one of the things that stands out was Web 2 was a place where data was used for monetization. A lot of companies, that's how they make their money. Ford just did a study, and they can make about as much money selling their data as they could selling cars.
Yeah.
If they extract their data from the cars, because they have so many millions of people in cars, and that data is worth just about as much as if they were, selling cars. And I gotta believe that they're not selling that data. I mean, I just, it just wouldn't make sense as a capitalist not to sell that data. It just goes against the grain, But that's Web 2. Now, Web 3 is a decentralized version of the internet that runs on blockchains where everyone owns their own content. And they don't have to depend upon Google or Apple or big companies like that. And unlike Twitter, Web 3 is decentralized, so no one can be kicked off. And you may think that's a good or a bad thing, depending upon your point of view, but users own and control their data. And this is going to have, Web3 is going to have a lot of implications for companies like Facebook and Google and Amazon that makes money. Amazon doesn't just make money off of delivering packages. As a matter of fact, they probably make more money off the cloud. When you hear somebody say it's in the cloud, that means it's on one of Amazon's server farms somewhere. And that's what the cloud is. It's Amazon web services that they provide space in what they call the cloud. There's nothing mysterious about it. It's a bunch of servers hooked together in a mountain somewhere.
Right. Yeah.
Yeah. But that Web3 is coming on, and it's gonna have some impact in terms of extracting people's data and selling it. And this is going to affect a lot of companies like that. Now, Yuga Labs created these Bored Ape Yacht Club apps, or pictures, profile pictures they call them, and Jimmy Fallon loves them, Paris Hilton loves them, and
Justin Bieber, yeah,
that should be a red flag.
Snoop
right
Dogg.
there.
Snoop Dogg just wore a sweatshirt with his on it the other night.
Yeah, it's also his Twitter handle, I think.
Yep. Yeah, a lot of them use it on Twitter. Yeah.
Right, right. Eminem just paid 450 grand for a digital
Yep.
Bored Ape token that's called the Eminape. Like Eminem, this is called the Eminape, and it's a token that he uses on his Twitter profile. So these things may seem silly or nonsensical, but they have value and real value with real money. 450 grand is a lot of money to pay for a digital picture that you can use. I mean, so I don't know. But
yeah, it ends up acting as a passport into their ecosystem, right? And this is where
right,
you see kind of an interesting, exclusive club kind of feeling form of like,
right.
when you buy into the community of something, it's really not just about the image. It's really about like, are you able to afford to be like cool enough? And like, is your ape cool looking? Like, are you like invited to these parties? Do you get like first dibs on the metaverse land that they're selling? Like, do you get cool derivatives of your apes that are like other apes? It like creates this whole like, cultural economy around this idea of like being an ape.
Of celebrity,
Right.
Because they sold these plots. They sold 55,000 plots of, let me see, 55,000 plots for a price of 305 ape coins. Now, one ape coin is about $5,619. So, ape coins, that's a lot of ape coins for a plot. And hence, the $320 million that they raised.
Right.
In fact, there was
Despite
so much
the problems,
activity. Yeah. And it's speculation. I won't say it's gambling. It's kind of like the early days of the stock market. When you had these, people, speculators, driving up prices, and that's basically what's happening here. Would you agree with that, Alex?
Yeah, it's very much like that. I mean, I think the fundamental problem, one, is that when you buy these NFTs, and I have a bunch because I think they're fun, but I don't put money into that. I don't buy them with the intention of like them being an investment. I think this is the key, right? When you walk into a store and you buy a pack of Pokemon cards, you're not buying them because you're hoping one of them is going to change your life. Hopefully not. The reality is that like you could maybe find a Pokemon card somewhere or have one from 10 years ago that like you could sell for a lot of money. And this is how some of these NFT projects work. When most people got their first ape for $200 or whatever it was back in the, a year ago, people don't realize this, but Bored Apes are only like a year old. But when they first came out, they weren't like this. It was just another generative NFT project. And so people are like, these are pretty cool. I'll mint a couple. And people, but they had to have enough capital, let's say a couple $100 to like get in. So they minted their first ones. They didn't know that Bored Ape, compared to all the other NFT projects, was going to take off like this, because plenty of NFT projects like it today, every day, new ones come out. They don't even mint out. So you have like these projects every day that end up going like this and then losing value immediately. And most people entering the space are losing money, right? Because it's not an investment. You're essentially just buying collectibles. And when you're just buying collectibles and trying to be early to what's going to be the most collectible, you're just hoping that like, one of them magically ends up going up in value. Except the exception is if you're rich enough to recognize that something is almost valuable, where you have the capital to get into it, like Bored Ape, you're like, okay, you can risk. The floor right now is 116 ETH. That's over $300,000. So that's the cheapest one. The cheapest Bored Ape right now is $300,000.
$200
so if you want to buy it now,
$200 a year ago.
Yeah. Right. So the people who got lucky, that's life-changing money, right? Ironically, a lot of them haven't sold, but they're just like holding on for $1 million. I don't know. But, some of them, like the people buying in right now, are celebrities, right? It's the people who can afford to drop $300,000 at least on a picture of an ape, right? But it's because now they can go to the exclusive parties in New York. They could go to these NFT events. They get merch that they can wear around and show off that like, I own an ape. right? It creates a culture around the exclusivity of that. But at the end of the day, for most people, for the retail buying of it, you're essentially just buying plastic collectibles, or you're buying things that you like. You should be buying things that you just like the look of if you have some money to play around with that you don't expect to get back. Right. If you want to be a part of a community, I pick them based on like an artist. Like if I like a certain artist, I like their work, I like the community that they've built around it. I'm in the Discord, I see that it's like good people. I can support marginalized artists who otherwise may not be invited into art galleries or have the ability. Those are the kind of NFTs I like to buy, not because I'm going to get a return on it, but because that's the whole point of this technology, right? The technology is really to support that. The problem, though, and this is where you have a lot of risk and why it feels like gambling, is because there aren't a lot of people in the space with a ton of capital, a ton of liquidity. So what happens is you have new projects like Moonbirds, things like that. You have new projects pop up and the liquidity just shuffles around. It's the same people moving their liquidity around, right? There's only, there's not that many people in the space that are actually buying these. There's maybe over 1 million people at this point. A year ago, it was like 36,000 people.
Excuse me, Alex, if I could interject, but Moonbirds are the #1 NFTs in terms of volume and money right now on OpenSea, right? Is that correct?
It changes every day, but they were for a while.
Yeah. Okay. They may, So, a lot of these things are, they're digital, Bored Ape Yacht Club, and it's a little picture, but you get some exclusivity.
Moonbirds are down to 6. They're down 68%. And this is why what you see is all the liquidity from Moonbirds. People sold their Moonbirds at a high, right? 30 ETH, 40 ETH, whatever. They sold their Moonbirds and they poured that into other deed for Yuga Labs. And so it's the same people just moving their funds around, right?
Funds around, right. And I will say this though, is it was $200 last year and it's 300 grand this year. Not a lot of people bought it at 200 that still hold it at 300. If you invest $200 in something, I guarantee you if it goes to 10 grand, you probably sold it long before then.
There's a lot of apes. You can look at the sale history because it's on blockchain, right? So you can see somebody sold it for 1 ETH or 2 ETH and then 5 ETH and then 10 ETH and then 20 ETH, right? Every person is like, I'll double that, I'll triple that, right? I know some people who got in very early who are still holding their apes, and it's because they genuinely believe in the culture of what they've created. They like being a part of that community. There's a lot of people who couldn't, they wanted to take the profits, right? Right.
And people like that typically aren't hard pressed for the money either.
Right.
It's just the utility or the exclusivity, right, that they're interested in. So but it's very interesting. So NFTs, non-fungible tokens. If you're not familiar with non-fungible tokens, we had a show for that. Check it out. It's on the DeFi Collective on YouTube. All of our shows are on YouTube, and it's the DeFi Collective. And we said then that this was something that's going to be here to stay. And I believe we did the show last year. So this is, NFTs are here to stay. They're financial instruments. Now you see with Coinbase and Goldman Sachs, you kind of have the decentralized finance and the centralized finance, the NFTs and the fungible tokens sort of coming together and working together. And typically with something, anytime you have before you have a big change in a financial system, there's sort of a merging of the system to two different systems, and they kind of work together for a while until people get it figured out. But, decentralized finance is in its earliest stages now. And another reason to believe that it's probably going to be taken off, I won't say real soon, but pretty soon. There's a lot of venture capital money is in Web3 now. Now, people say, well, Web3, that's virtual reality, it's the goggles and the going to the coffee shop in cyberspace and all that. It's not really real. Well, you got a lot of venture capitalists who are betting on it, a lot of money. hundreds of millions of dollars, then they think they're going to make some money. So Alex, talk a little bit about that, about the venture capital that's popping up in Web3, and what sort of implications that might have moving forward for, the financial system we're in and the one that we're going to.
It's a double-edged sword because, on one hand, it begins normalizing a lot of this technology. It legitimizes a lot of this technology, things that we've been building for a while, things we've been excited about. And that legitimacy, that obviously VC money going in, that legitimacy is exciting to see on one hand, right? Because even though obviously VC capital and these aren't like they're not always the best people on the planet. They're not always like the most ethical. They don't always actually care about how something impacts the world or impacts people, right? Their bottom line is like, how does this maximize my profits when I put money into it, right? And that's kind of it's an ethical dilemma, right? Because we need that in terms of like legitimacy of the technology and adoption of the technology. But at the same time, like I said, you have this ethical dilemma of like, what are the implications of that? How does it influence the things that we boast about when we talk about this technology, the access and equity, the ability for everybody to use it, the influence of the people who are using it on it instead of the influence of profits and having to fulfill investor needs. These aren't things that NFT projects formally, especially in another Web3 projects, had to worry about, because before it was like, a group of core team. Usually they handed it off to a DAO at some point. They took some money, but for the most part, a lot of the creation of this technology to begin with was really communal. It really fulfilled the whole dream of decentralization of like, I'm not better than you are in terms of like this technology. We're all equal players.
The reversal of ownership. The reversal of ownership.
Right.
People weren't initially in it to make money.
Right.
Like so many things in our society, a lot of progress comes when there's money to be made.
Yeah.
It's amazing. It's like, I think about certain diseases. I mean, like HIV, when they found out what they could sell that, for, I remember hepatitis C, somebody said, well, if you invent a cure, you can sell it for $1,000 a pill. 6 months later, there were like 5 companies that had a cure for it,
Right.
So, that doesn't always have to be the reason that technology moves forward, but many times it is. So I think venture capital money does play a role, but I think it has to be sort of balanced out. I don't know, with legislation or common sense, or how you do that, because it's sort of goes against the grain of the spirit of decentralized finance.
Right.
The spirit of decentralized finance is so that everyone can participate and have a say. So you don't want to have one guy with $280 billion, and then the guy a mile away can't feed his family. Yeah. And they both may work at the same company and do different things. And one may own the company and one may work there, but they're both contributing, so I think, venture capital money has its place, but I think eventually, particularly when Web3 really takes off and the data is not, they're not able to really to monetize data in the same way they are now, there'll probably be some philosophical changes, I think, in the technology and the people that push the technology forward. Would you agree with that, Alex?
Yeah, I mean, I think a lot of the critiques of venture capital money and how it influences things have to do with the old financial system. And I think where we have a little bit of a tricky situation is like, we're still in this moment of transition. And so they're seeing the money pouring through Web3, and they're seeing dollar signs within the traditional finance world, right?
Right.
They're seeing it as dollar signs in terms of like how they have already made money. they're not seeing it, for that. Not all of them, but a lot of them are not seeing it really for what it's worth and what it does to change that paradigm. And so I think the challenge for us is how do we create a culture and sustain a culture around the technology itself that kind of not only safeguards but like establishes sort of the rules of engagement, right? How do we build this so that it so that venture capital understands upon its entry, or that the market itself, the decentralized market itself, supports the things that it should be, right? That supports the creators, it supports the independent, the independent investors and the create, people who we want it to support, that it should have access for.
Right.
And what we've seen is like more than any other time in history, when things like Moonbirds and Bored Ape have these events that pour a lot of money into venture capitalist pockets, what you see is a huge backlash in terms of the rest of the crypto communities critiquing. and you see this really vocal opposition. You see this really you see a huge opposition for a lot of people who have capital from crypto, but are sort of the wild, they're like the cowboys of it. They're not putting money into this stuff. Where they're going to put money in response is into projects that don't have that paradigm. And I think a lot of the VC firms and a lot of the centralized companies, banks and asset managers, they're going to have to change. Like they're going to have to realize that that's the direction we're going. And if they don't adapt, it's, it's good luck because what most people want in the space, the one, those of us who are creating it, we want a better economy, right? We want a newly designed economy that's built around everybody being able to access it. And that's why a lot of us have not had the most favorable opinions of things like Moonbirds.
Right. And I think just to sort of expand on what you talked about as far as the economy goes, when you have a concentration of wealth and when you have a shrinking middle class, you reach a point where people don't have money to spend to keep that wealth going. Whereas if you look at countries that have more equal distribution of wealth, it tends to last a lot longer and it creates more wealth. Because if you have 100 million people out of work that are not buying things, that's going to hurt the people who are selling things, because there'll be 100 million less people to buy it. So I think, originally capitalism was supposed to be laissez-faire capitalism, where the government was supposed to stay completely out of it. Well, that didn't work too good. So the government would get involved from time to time, particularly the United States. And they kept bailing it out and bailing it out and bailing it out, and that's what we just did in 2020. We bailed it out again. We bailed it out when Obama came in. It said it was too big. These companies are too big to fail. Yeah, it's because you let them get that big, too big to fail, and you don't know what to do with them, So I think, eventually, and this is the hope. One of the things that decentralized finance does is it reverses the flow of ownership, and it gives everyone more equal footing, if you would, in terms of making money and investing their money, because you don't have a bank that's paying you, half or 1%, and then they invest your money and make 40%. You decide where you want to invest your money and how you want to do it. Also, we talked about worker co-ops, or DAOs, decentralized autonomous organizations. A worker co-op is a company where the workers actually own the company and they make decisions for the company and they reap the benefits. There's no one guy that owns all the stock. Everybody that works there owns part of the company. And when they make big decisions, people vote on what they want to do. Now I can give my vote to Alex, because I see where Alex probably knows a little bit more about data analytics than I do. And maybe he can give my vote and his vote to somebody else to vote on our behalf. but I think worker co-ops already exist in a number of countries, excuse me, including Italy, I think Finland, and a few other countries in the Netherlands, Norway, I'm pretty sure, and maybe even Greece too. And they've been pretty successful. So this would be like, instead of Bezos making all the money from Amazon, the Amazon workers would own the company, and they would reap the benefits of the profit. And since there's no one owner, because when you have one owner, you have centralized power. They're going to make as much money as they can and pay you as little as they can. And see, that
Yeah.
is kind of cool for the guy at the top, but it's not healthy for an economic system to flourish on the long term.
Creates a vacuum, right? Everything is streamlined then to centralize wealth towards the top. And so, if you have a company like Yuga Labs that's working actively to do that, is that decentralization anymore? Even if they're using decentralized tech, is it decentralization anymore if you are a company trying to fulfill all of your obligations to VCs and line your own pockets with, projections and things like that? And this is where you run into issues, and they ran into a lot of issues, because you have so much capital flying around. They're making so much money. They literally halted Ethereum's blockchain, caused a gas war, where people are paying thousands and thousands of dollars in gas fees, because it created essentially an auction for gas. The way that gas works with Ethereum is that the network traffic itself sort of determines prioritization of your transactions based on how much you're willing to pay for gas to a miner to process your transaction. So if you have a bunch of rich people competing for some virtual land, and there's thousands of them, they're just competing with each other, pushing up gas prices because they don't care. They'll pay whatever for gas. And what that did is it created it created an issue where most people, average people, couldn't use Ethereum for a few hours, right? This is a big issue. And what they did is they came out, instead of like acknowledging the culture that they've created, the problem that they caused, they came out and said, well, it's pretty clear that we need our own ape chain. and the reality is, if they want to go do that, fine. That's part of decentralization. If you want to make an ape chain that you guys can all have your weird cult transactions on it and do whatever you want, that's fine. But it's stupid, right? Because it's sort of like, oh, sorry, we clogged up public transportation, we're going to build our own train. Like, maybe you should have planned. Maybe you should have planned your field trip better. You know what I mean?
And these are some of the issues that will arise periodically when you're going from one economic system to another.
Right.
When you're going from you're going to DeFi from fungible token-based economy. These are the kind of things that arise, and many times they have to be addressed through legislation. Suppose suppose a company of the country, Biden says, okay, from now on, we're only accepting Bitcoin for tax payments. Well, pretty soon he's got all the Bitcoin. So that sort of defeats the purpose. Right. So as these things arise, I think we'll see more and more legislation, and there has to be some sort of legislation, some sort of order in the market, so these things don't happen. Now, it could be something as simple as smart contracts.
Right.
Yeah.
With proof of stake, or with different consensus mechanisms and different changes that Ethereum's undergoing, you won't have the ability to cause that gas war anymore. And this is part of it. When you grow and you learn, you figure out how to create these layers so that they work for a variety of new circumstances. Right. That's part of creating a new internet and new economy.
Right. And Web3, read up on it, find out about it. It's here to stay. It's kind of like computers, 30 years ago, 20 years ago. Matter of fact, I met a guy last year who doesn't believe in computers. He said, I don't need a computer. I've been running this business for 30 years without a computer. Why do I need
just a fad?
Just a fad. Yeah, he says it's not a necessity. Well,
yeah, right.
There'll always be people like that, but technology moves forward, and whether you choose to come along is a personal choice. So there'll probably always be people that have dollar bills when they have no value. There'll be somebody with $20 million in dollar bills. and they may not have any value, you know. So, you know, technology is moving forward. Web3 is here to stay, and decentralized finance is sort of what's coming down the pike. Alex, for the people that aren't that familiar with DeFi, give us tell us exactly what decentralized finance is.
Sure. There's a lot of like financial instruments in the traditional world that have been created through plenty of time. A lot of band-aids put on top of band-aids, and you know, things jury rigged together, and plugs plugged into other plugs, and you know, this is the infrastructure that runs traditional finance. You want to send some money to somebody across the world, well, it's going to take like 6 different steps in between, and eight different companies, and everybody's charging fees in the middle, right? Yeah. But there's all sorts of complex financial transactions that run our world, right? When a company purchases property, right, or they use something as collateral. You look at like Elon Musk buying Twitter. What did he do? It was like $12.5 billion of traditional bank loans, $13 billion of margin loans against his current assets, $21 billion of cash from I don't know yet, but this is a complex financial transaction. It's going to take 6 months. Yeah. It's going to take 6 months to finalize all this, right? That's insane. And so all DeFi is it's a brand new creation of the things that we need to do in a new economy using digital assets. It's a creation of those financial instruments for that decentralized world. So if you and I want to, let's say you have 10 Bitcoin and let's say you have 10 Ethereum and I have 10, I have 10,000 USDC and I want some Ethereum. What you're doing is you're going to provide that to a liquidity pool. You're getting rewards for providing that. And I'm going to swap my tokens with the liquidity pool, right? But in order for me to swap those tokens, that liquidity pool and that platform has to exist to give you rewards to incentivize you to use it, give liquidity, and me incentivizes me to use it because it's a fair price, it's equalized, it's safe, right? And so how do we create that without a centralized bank or banking system that runs that? Well, you most likely have a core dev team. They've built this thing. You create a DAO around it. So the entire community that relies on it determines that they make decisions for it through voting, right? So you have this co-op that runs these financial instruments that facilitate all the financial, any wide range of simple to complex financial exchanges and settlements and things in a digital asset economy.
Right. And I want it done instantaneously.
Right. Instant, completely.
I never understood why a wire takes 24 hours. if you wire, or if you get a wire, if it's north of 100 grand, it's going to take you about 24 hours. I mean, it's freaking electricity, man. Why does it take so long? And this is it takes long because somebody can hold on to that 100 grand for 24 hours. And if you do that with enough people for a whole month, you can skim a lot of money. And that's what it is.
You got a lot of trading desks that are it's like deciding to take up those orders.
Yeah, it's a Las Vegas skim game is what it is, Yeah. But, with blockchain, things get settled instantaneously. And there's no lag time, or very little lag time. And I guess that's one of the things that's been getting worked out. So there's not so much lag time, between exchanges of different currencies.
Yep.
Yeah. There's, when you use a credit card, it seems to be instantaneous, but it really doesn't clear until that night and then the next day. It's just like they front you. They say, "Oh, we know, Alex, we know you're good for the 40 grand or whatever."
Right.
Take his credit card and
you look, it still says pending for a while.
Yeah. Yes, it says pending.
Yeah. You're like, what does that mean? Well, it means that there's, 80 different steps in the middle.
Yeah, there's 80 different steps and everybody gets a piece of the action,
Yep.
Yeah, kind of like your cable bill. There's stuff on there. I was looking at my cable bill today. And I'm like, why do I still have cable? I don't know,
I don't know either.
There, Yeah, I know. I said, why do we still do this, So, but so Web3, virtual reality, decentralized version of the internet is sort of what's coming down the pike. It's here, and it's not just virtual reality of gaming. People thought gaming was just for games, but now gaming is creating a lot of virtual real estate that people are buying and selling. Even game characters,
Yeah,
people are buying
characters,
game
game
characters.
assets,
Yeah, that you can
clothing.
take from one game to
Yeah,
another. Yeah,
everything. Yeah,
yeah, so
tools,
everything.
weapons. Yeah,
Yeah, yeah. So Web3 is affecting it's affecting our lives probably in ways that we're not fully aware of yet, because back in 1990, if someone told you, you said, well, how's the internet going to affect me? It's just like an encyclopedia. That's what it was back then. Even before the 90s and the early stages in the late 80s, you could go on and see information. For instance, if you wanted to see, if you're working at a Ford Motor Company, you said, what do people get paid in my position at Ford? Well, somebody would take that and post it up there, and you could go and see things like that. But there was no interaction. And then, Web
right.
2, there was data monetization, there was more interaction. So Web 3 is sort of the next step. And it's exciting. It's an exciting time to be at the forefront of something, that's just being created. And
Yeah,
also the capitalistic system is kind of going by the wayside, because for one thing, it's really based on petroleum, you know, and petroleum's running out. And I think everybody kind of knows that, you know. So eventually, what's holding the dollar up, and the yuan, the Chinese yuan up, and the ruble is oil. And a lot of times when the oil goes away, these currencies will need something else. Now, speculation in New York stock exchanges and there's exchange all around the world is one way of creating value where there's no value. Like for a company that hasn't made money yet, I don't think Tesla's making a whole lot of money, but they're worth a whole lot of money. And the way you
they're another one with Bitcoin. They still have Bitcoin on their balance sheet. So
yeah, I bet they got more than what they're saying too.
Yeah.
So it's the economic system is changing. It changed from feudalism, because of the French Revolution. They said, oh, it's going to be capitalism. This will make everybody equal. Everybody have an equal chance, and we're going to get rid of the kings. Well, now you look around, you got the kings and queens all over again. So I guess it worked for a while, but now it's time for something else, and maybe decentralized finance is what it will be. I think that's what it will be.
Yeah. Did you see Gunna at the Met Gala had his ledger around his neck?
No, he did. That's what he did.
Yeah, he was wearing his ledger necklace around his neck.
Oh, okay. Yeah.
Hopefully maybe an empty one. I don't know.
Hey,
I wouldn't wear a full one to the Met Gala.
No, because somebody will get that thing and figure out how to get into it,
Yeah. Somebody meet you in the stairwell.
yeah. But you never know. I mean, that's I guess that's fashion now. So you
steal your Bored Apes.
Yeah, you probably see some of the kids and the rappers wearing it now,
Yeah.
So, so we'll see. Yeah. But it's been an interesting show. Today it was more like 60 minutes. We're kind of reporting on things, but we have to do that from time to time to kind of it helps us kind of stay up on cutting edge decentralized finance things that are going on. So I want to thank you for watching. We appreciate your time, but unfortunately ours is up. Alex, do you have anything you want to say in closing?
No, yeah, but make sure you get your Bored Apes.
Yeah.
Yeah, get a couple. I mean,
yeah, you never know. Yeah, you never know. Yeah. I bought something the other day, and I don't even know. I remember what it was, but it was like you could get 14 million of them for $22. So I said, hey, how bad can it be?
Probably pretty good until you want to sell it.
Yeah, until you want to sell it. Yeah.
There's no volume on the backside of it.
Yeah, there's no volume. Yeah, it's so I said, I'll spend $22. What the heck? You never know. So yeah. Okay. Well, thank you so much for letting us into your homes, and we will see you next week. And our email address is show@ the DeFiCollective.com. I have to say that, show at the DeFiCollective.com. That's our new email
we got more
address.
big things coming, right?
Yeah.
We're working on logos, and we're going to get the website together. So,
and we'll have guests. We'll start featuring special guests pretty soon from the world of economics, finance, decentralized finance, blockchain,
politics,
data analytics.
maybe.
So we're convinced that this is here to stay. So we're going all in on it, you know. So if you got $22, send it in. You might be a millionaire someday. All right. Take care. Bye-bye.